Hi guys, it's Stock Harry, and I made thousands of dollars over the past few weeks traveling across the country, and I'm going to show you how I did it. But more importantly, I want to get you prepared for this week because what the Federal Reserve does on Wednesday might shock you. So let's get into it. So I'm finally back from storm chasing, and I actually got back about a week ago, got some incredible footage, such as this tornado here. Then I've spent the last week sick in bed with just really what's been one of the most horrible sicknesses I've had since I got COVID a few years ago. But now I'm starting to finally feel better, and I'm back with you. And I'm so happy to finally be back with you. I know you've been missing these market updates. So let's just talk about some of the crazy things that happened last week. And then, well, you got to go over what's going to happen this week. Last week, crypto tokens plunged after Gary Gensler with the SEC stepped up its crackdown, and they sued both Binance and Coinbase. Coinbase's stock plunged on the lawsuit. Coinbase actually got sued just one day after Binance did, and they specifically called out a couple of different cryptocurrency tokens, but interestingly, they did not call out Bitcoin or Ethereum. And both Bitcoin and Ethereum held up fairly well in the overall downturn. It was mainly the altcoins that took the biggest hit. The other thing that we saw that was kind of interesting in the stock market overall is we saw quite a few days where the Russell rallied, it skyrocketed up 2 or 3%, and the NASDAQ was fairly flat, or in some cases even fell while the Russell rallied. And what's so interesting about this is that it's the exact opposite of what we've seen over the past 8 months. Over the past 8 months, the NASDAQ and S&P have been rallying while the Russell has been falling behind. And now we're starting to see a bit of a shift. And I'm starting to think we might be getting ready for a sector rotation where money starts getting pulled out of the mega cap tech stocks that have run up a ton, and it starts getting moved into the smaller cap stocks that are in the Russell. Now, all of that is going to be dependent upon what actually happens with the Federal Reserve this week, because we have a lot of major market news coming out this week. There won't be a lot of Fed speakers this week because they're still in their blackout period. The Fed speakers won't start up again until Friday, but the real market news is going to start on Tuesday. On Tuesday morning, about an hour before the market opens, the Consumer Price Index, or CPI, is going to be released. Then on Wednesday, about an hour before the market opens, the Producer Price Index, or PPI, is going to be released. And these two inflation data points are going to be the last data inflation points that the Federal Reserve will have a chance to look at before they make a decision on how much to raise interest rates by or whether or not to pause on Wednesday at 2 p.m., which will occur about 2 hours before the market closes. Then on Friday, Fed Governor Christopher Waller will speak. We also get the consumer sentiment. And then keep in mind that whatever options you open this week, that you might want to close them by Friday, because next week, Monday, June 19th, is a holiday in the U.S. and all the markets are closed. Now, current expectations are about a 70% chance of the Fed pausing and about a 30% chance that the Fed is going to do another rate hike. Now, even though most market participants think the Fed is going to pause, it's important to understand that this particular policy decision isn't quite set in stone. And it's a lot more uncertain than you might think. And that's why we still see a 30% chance for a 25 basis point rate hike. And last week, we saw both Australia and Canada do surprise rate hikes. So I wouldn't be surprised to see the US do a surprise rate hike as well. And what they do, while currently they're expected to pause, and the big thing is that we get the CPI inflation data and PPI inflation data coming out during the Fed's blackout period. Now, normally the Federal Reserve likes to signal what they're going to do, but they are not able to do that because they're not able to talk. However, I have seen this in the past when we get late breaking inflation data. If that late breaking inflation data comes in a lot hotter than expected, meaning that inflation comes in a lot higher than expected, what the Federal Reserve will do is they will leak what they're going to do to CNBC and maybe Wall Street Journal. And so as we're looking at what the Federal Reserve is going to do this week, if they do in fact pause like they're expected to, we probably won't get any updates on expectations. But if the CPI comes in higher than expected and the Federal Reserve decides they're going to raise rates and not pause, they will leak that information to CNBC. So keep your eyes on CNBC on Tuesday and Wednesday, because that will be the news outlet that will most likely report what the Federal Reserve is going to do if they're going to do a rate hike instead of a pause. And keep in mind that even though we are officially back in a bull market on the S&P 500, now that it's risen 20% from lows, the market might be headed for more stress after a Fed pauses on Wednesday. Some people question the new bull market call based upon how narrow the market leadership has been. That is, just a handful of the largest tech stocks are responsible for most of the rebound in the market indices. And I covered this in a prior video, how just 5 stocks have rallied, and those 5 stocks now make up 50% of the NASDAQ and 25% of the S&P 500. I talked in a prior video about how most stocks continue to trade near 52-week lows. And if you actually exclude the 8 mega cap tech stocks, the S&P 500 is trading very close to those October lows, meaning that 8 companies in the NASDAQ and the S&P have rallied tremendously, bringing up the entire market index. And just those 8 companies alone have caused the NASDAQ and S&P to recover 70% of the losses from 2022. But if you take away those 8 companies, the remaining 92 companies in the NASDAQ are trading near the 52-week lows. And if you take away those 8 companies from the S&P 500, the remaining 492 stocks in the S&P 500 are trading near 52-week lows, showing that while the stock market looks like it has gone on this massive rally, that massive rally has been limited to only a few select stocks, while most stocks continue to trade bearish. So this has caused a lot of people to question whether or not the S&P is actually in a new bull market if the rise in the S&P has been limited to just a few stocks. But there's another reason why investors should not become overly confident. And that is that even if the Federal Reserve decides to pause when it announces its decision on Wednesday, a longer lasting shift by the Fed is by no means certain or even warranted. That's because even if the Fed does pause, it does not mean that more rate hikes aren't coming over the rest of the year. And the market should brace itself for a Fed that might continue hiking, even if this one FOMC meeting happens to be a pause. Another analyst said, we think the Fed ends up skipping this month, but setting the table for more rate hikes in July. And the reason is that inflation will continue to pose an issue for the Fed. On an annual basis, the inflation rate was 4.9% in April, which was slightly less than the market estimate. But the problem is inflation remains sticky. The picture is one of inflation and inflation pressures that are higher and stickier than the 2% number that the Fed has been aiming for. So I think the data that's already here, it's telling us that there's more rate hikes on the way. And in another sign that inflation might come back, the supply chain disruptions appear to have come back as well, with the Port of Seattle now closed due to a labor strike. And that's not the only thing that worries me, Because as the mega cap tech stocks have rallied, and it hasn't just been the mega cap tech stocks, there's been others as well, such as Palantir. This has caused a lot of FOMO buying, or fear of missing out, where people are buying at elevated prices purely because they think these stocks are going to continue to go up in the future. And it's sort of the greater fool theory, meaning you're a fool because you're buying stocks at a high price, hoping to sell to an even greater fool than yourself at a higher price in the future. Now, I'm not calling you a fool. I'm just explaining the greater fool theory and kind of explaining what FOMO is. And there's a lot of fear in the market that these elevated prices are going to come to an end soon. Some of this can be seen in Tesla's stock. Tesla has now risen for 11 of the past 11 trading days. And there's only been one other time in history where Tesla rose 11 days in a row, and that marked a macro top for Tesla, where Tesla then sold off over the next month. It was down significantly. So a lot of people are starting to fear that the mega cap tech stocks are overbought and due for a pullback. And this is something that Jim Cramer has pointed out as well. Now, I rarely agree with Jim Cramer, but I think he's right on this one when Jim Cramer says he does not trust a benign market like this one. Jim Cramer told investors to be wary of the week ahead, even though the market's been fairly calm. Cramer said, too many things can surprise you. Too many things can make you panic, and of course can make you sell. Because if you came in at these elevated levels, you started buying today, say, you likely won't have much conviction if the market takes a sudden swoon or suddenly goes down. And even though there's been a lot of heavy buying of mega cap tech stocks and a few others, there's also in recent days been a lot of selling as investors take profits, and large institutional investors, surprisingly, a lot of them have not been jumping on the bandwagon. In fact, ETF flows have sputtered as investors favor defensive strategies. Fact is, risk-adverse investors are not chasing this new bull market. Instead, what we've seen is companies and big investors are selling shares at the fastest rate in years. Large institutions have been using this most recent market run-up to sell shares and take profits. They're now returning a lot of those profits back to investors in the form of cash while they wait for the market to come back down and look for the next big opportunity. Now, as large institutional investors have taken the run-up over the past few months as an opportunity to sell and take profits, I just want to warn you not to jump in right now when large institutions are selling. Because as large institutions are taking profits, this isn't the time to be buying, it's the time to be taking profits as well. And in fact, I've been using this as an opportunity to make incredible amounts of money, even while traveling and storm chasing. In just one day last week, while traveling down the road storm chasing, I made a $2,835 profit, which was about a 11% profit on that particular portfolio. And I did it all while on my cell phone, just proving you don't need all these sophisticated algorithms and charting software and all this stuff to make a lot of money. You can make money on your cell phone, and you can make it while on vacation too. Once I got back, we took advantage of Apple's Worldwide Developer Conference to buy put options, knowing that history shows that the WWDC is very often a buy the hype, sell the news event. So we bought put options on the day of the event, and I made a 136% profit holding overnight. Sweet Cheeks made 140% profit, and Vivaldo made a 100% profit. I would love for you to join me in making money like this in your portfolio as well. I want to show you guys how to take advantage of certain opportunities in the market, how to buy into certain setups, and use options, including put options and call options, to make money in your portfolio as well, no matter what the overall market is doing. If you want to learn how to make money like this, I invite you to join me in my coaching program where I will teach you how to trade options so that you can make money no matter what the market is doing. If you want to learn how to make money with us, then come join us. Just schedule a call with my onboarding specialist who will answer all of your questions and explain the whole program to you. You can schedule a call with the onboarding specialist at weprofitdayandnight.com. That's weprofitdayandnight.com. If you got a lot out of this video, then be a good friend and share this video with your friends and family so that they will know what's going on in the market as well. And don't forget to hit the like button and subscribe. And if you want more storm chasing content and want to know what's going on with that, you can follow all of my videos at youtube.com/realseverevideos. That's youtube.com/realseverevideos.